Hi guys, and welcome to 21metrics podcast. I'm here today with Juhani Savonen, our quant, and we are about to discuss Bitcoin, macro, and everything in between. But first, don't forget to check our partner Siteshift.ai and their new trading bot on Telegram. I will add the link to our show notes. But yeah, Juhani, welcome.
Yeah, thanks a lot.
Let's discuss Bitcoin. So Bitcoin is at
Yes.
105K, and the big question to traders and investors is that will this correction continue? And if you look at like the CVD data here, like basically all the cohorts are selling. So I'm not seeing like any real buying pressure here. So it looks pretty bearish here. What is your take on it? Are we going lower now? What is your like target? Will it be like 100K or what is your like objective outlook on the market?
Yeah, I think like I expect at least to trade 100 pretty in short term, and then probably lower if the liquidity starts to drop because there's a lot of speculation about that U.S. economy is slowing down, and that's kind of like what I agree with that kind of analysis because at least that's kind of like what I see in macroeconomic data that there's less driving in highways and less shipping in general. So it's kind of like matches quite well what I would expect to happen risk assets when people start to think if they should save money from somewhere because we already know that from US housing market is having longer periods of selling times, and that's kind of like also indicates probably that some investors are willing to take out their money from risk assets and buy some more stable ones like gold, for instance. And that's kind of like what at least observing in commodity markets recently. Also like that a lot of people sell like palladium and other more volatile assets like Bitcoin as well. So that would kind of like match that kind of narrative, I think so. Like more like recessionary or stagflation narrative where we see less growth and less opportunity to grow. Also the valuations which are quite high across all the asset classes, of course, as well in crypto space.
So you're saying there's like a potential recession in US and
Yeah, at least slowdown. That slowdown I'm already seeing in shipping data for sure. That there's less like activity also globally. Like if you look commodity prices like copper and the other ones, those are also fell a bit. So that's also kind of indicates that there's less industrial demand for the typical industrial stuff.
Yeah. And that's why like risk assets are now then suffering. So
yeah, exactly, because then they notice that if the copper prices are lower, the industrial output is lower, and that means less, let's say, optimism about like economy, and then people start to think if they should save money, right? Especially if you know like that the US is the main crypto market where a lot of people are extremely levered in that sense. Like if you think about credit cards and those kind of things, those kind of type of debt instruments, then that could lead to, let's say, in a situation where people want to reduce their debt levels and sell the assets, because in the US, a lot of people also invest with leverage, and that's kind of like typical for crypto market, especially, right? So that's deleveraging normally means lower asset prices. So that wouldn't be any surprise if slowdown of economy would lead to lower Bitcoin price, for instance.
Yeah. Okay, interesting. So I made this chart recently on CryptoQuant, and I marked there that this is like the Bitcoin's price discovery cycle, and will it continue? We'll see. But at least like the Binance's stablecoin reserves are still high. So Binance has a lot of like stable coins on the exchange, and it could like basically flow to altcoins in theory. And like so that's kind of like fuel for a potential alt season. But like I think we have made this thesis here before that the Q4 could be bullish or positive. But should we now change this perspective here, or our view about it? Or what do you think that are we going to see like positive Q4? Is the Bitcoin seasonality going to kick in or not? How do you see it?
I think it just depends on Nasdaq, because Bitcoin has been trading with a high correlation to Nasdaq in recent months.
Yeah.
So if we see major correction in US equities, then I would expect that there might be not so strong, let's say, Q4. I think it just really depends on the jobs and other economic data that comes out in September when the Fed makes decision.
Yeah.
Personally, I actually think that if we see a really large interest rate cuts, that actually could be bearish because that would tell that the economy is worse than the market expects.
Yeah.
Like if let's say Fed surprises the market and there's higher cut, let's say more than 50 basis points, then we probably could have a more, let's say, selling in equity markets, because in recent days we also have seen that in US equities, especially in industrial sectors.
Yeah.
So that wouldn't necessarily like support strong Q4. I think it just really depends what happens to Nasdaq itself. But I'm not really like extremely optimistic about US economy at the moment. So probably would a little bit lower targets for Q4.
Yeah. So the correlation with Nasdaq is important as usual, and Bitcoin could trade like tech stock basically, or be correlated.
Yeah, it's kind of like tech stocks with leverage. I would say it just has more liquidity than, let's say, the Nasdaq at the moment, because you can trade also over weekends and any hour basically of the day.
Yeah. I think like one aspect when Bitcoin has now matured as an asset class is that like it will be more correlated with the tech stocks, so that will just like happen. We'll see. But we're now going to check your quant models. So this one is the on-chain model. Could you describe what is going on here? Is the on-chain
actually
still going on, or how do you see it?
It's basically just aggregates all the information that we have about on-chain, like how are the miners like profitable, and how much transactions there are happening, and what's kind of like number of new accounts, and how many accounts actually have Bitcoins in the on-chain. And it basically has just continued to decline, even though we had like slight increase in the mining revenue and miner profitability in last 2 months, which led obviously higher prices for Iron, Mara, and many other like crypto miners.
Yeah.
And now it has basically turned in last 2 weeks actually that it started to decline further. And that's kind of just tells us that there's not so much demand for, let's say, on the on-chain activity, I would say, and why the mining companies also don't have performed as well as the spot Bitcoin, for instance. But I think it's also like just related to the situation in interest rates markets, because typically this on-chain factor is inversely correlated with interest rates. Like when we have really high rates, then the on-chain activity goes down. Like this has been the case from February onwards, when people were expecting lower rates, but rates have just gone higher, and USD has just lost its value against other currencies.
Yeah.
And and as long as like the bond market situation continues like this, that interest rates go higher, bond prices go down, then I would just expect that inflation is quite high. I think so in certain sectors, not the CPI itself, but certain sectors they're showing like increase in prices, like some agricultural commodities, like certain necessities, like not like housing, but food for sure. This has been like the typical thing in commodity markets recently, and this kind of like supports the idea that on-chain factor is going down, because the situation in interest rate markets, and that's kind of like could be like indicative for a possible, let's say, end of cycle in crypto space as well, because that would be like something I would expect to happen for tech stocks as well. If we start to see that inflation is increasing, not decreasing, and that would basically make it harder to cut the rates without having negative impact on the economy itself. Because if the inflation goes up and let's say Fed cuts rates, then later on they have to just hike them more, exactly. So that would be like the main reason why I see, let's say, bearish indications from the on-chain factor, because it kind of like indicates the situation of the interest rates market and inflation a bit.
Yeah, so this mirrors that like back macro as said, but like I think like one factor which affects your on-chain model is that like a lot of the trading or investment activities is going on in MSTR and new ETFs and stuff like that. So they basically like people are just investing to MSTR and new ETFs, and that leads to Bitcoin having less on-chain activity per se. But
yeah, like partially might be. But I think it also like was kind of like thing in last cycle when people were buying some other asset classes like altcoins as well, which kind of like reduce also the activity of the on-chain. But it might be also like something has a bit changed. But normally there's like pretty long lag, like 6 to 9 months, and now we are like a little bit over time when we have this peak somewhere in last year's May. So yeah, we still are like below like 9 months like lag. So it's still like that we can probably wait that the next cycle to begin, I think. So the probably end of the year latest is when I would expect that crypto assets start to, let's say, price down a lot.
Yeah. So how do you describe your sentiment model then? It looks more positive than the on-chain, or how do you?
It's kind of like moves more with market, I would say, because it's kind of like reflects more like the current market situation. Like the on-chain is more like looks forward longer, right? Because we look forward 6 to 9 months. When we see now that the on-chain has declined, it just indicates that the crypto returns should be get lower in within 6 to 9 months. So that's what we have already seen, kind of that we don't see any extreme returns, positive returns in crypto space compared to, let's say, last year. And that's kind of like pretty much matches with the on-chain indications. But in this like news cycle, it's more like short term, right? Like we've really captured well like the bottom of, let's say, April or late March, that the sentiment started to increase strongly since then, and now it has started to decline a bit, but it's kind of like now stabilized slightly in recent 2-3 weeks or 5 weeks exactly. And it's kind of like more like indication that probably prices can stay where they are, or if the sentiment start to increase again, then we might have a slight increase in prices. But more like in the fundamental side, in like medium term, I would expect not to see like any extreme returns, because the on-chain is kind of like indicative that the average, let's say, expected returns should decrease, at least for Bitcoin.
Yeah. So our users can study both the models on our site, 21metrics.com. And so let's talk about institutions. So like the big trend this year has been the treasury companies of Bitcoin. Of course, like MSTR is the old one, but we are also seeing like Nordic ones and Japanese and really new ones in Europe. So is this like the alt season? Because I think many crypto traders have been waiting for an alt season, and they have kind of like expect the altcoins to rise, but maybe the actual focus is on these treasury companies instead of altcoins. And also I would say that the altcoin market is very saturated currently with like 43 million different tokens.
Yeah,
So
exactly.
it's like
Because I kind of like feel that's kind of like the case in most of, even though we saw like pretty high returns for Ripple, Solana, and Sui and similar coins in before the Trump presidency, right? Like when we had this huge increase towards the election day. But I think that most of, like, if you think about like size of returns, I think the largest returns you actually got, but if you invested in terms of like staking companies that use Solana or like the asset managers themselves, because those stocks made like 10 to 20,000% since end of 23.
Yeah.
Compared to, let's say, the average return that you would have gotten for investing in the, let's say, 50 largest altcoins, for instance. That's kind of like a little bit different ballpark, and that's kind of like holds also for these holding companies, I think. Like I think like crypto native companies were kind of like the thing of this season, I think.
Yeah.
And it's less in the altcoins themselves, because I think like cryptocurrency market is just gotten more efficient in recent years. Like you have a lot of traditional finance companies that have their own high frequency crypto derivatives trading desk, and that's kind of like leads to a situation where the volatility is not anymore in the altcoins themselves, but more like crypto native companies. I think like Defi Technologies, for instance, that was like 15 cents Canadian dollar somewhere in end of 23, and beginning of this year it was like more than 4 Canadian dollars. So it's kind of like gives you like indication where the returns were basically.
Yeah. The big bucks are here, and like you have companies like Wintermute, which are making they're acting as a market maker, making the market more efficient, as you said. And I think it wasn't really that efficient before, like in the cycles of 17, 18, or 21. But right now it's like, as you said, like many TradFi companies are in the game, and they're really making it more difficult to make money easily. So that's the
Yeah, I think that's kind of like the situation at the moment, especially in those kind of like market making. If you look like the spreads, like the financing fees as well, they are getting every year lower, especially for the largest coins. So that's also like indication of how mature actually the linear derivative market for cryptocurrencies is.
yeah. And as you said, like crypto native companies are the new alt season, and there's just like a limited amount of money, and like also like one argument is that if you think about like scarcity, it's kind of like hard to still like kind of like hard to make Bitcoin treasury company, because you need a lot of money, you need to think about the regulation and stuff like that, and you need a lot of capital. But like the cost of launching a new coin is basically zero. So we could with
Yeah,
you
actually.
with Juhani, we could tonight launch like a Timo Juhani coin, and try to pump it and stuff like that. Even get it, we get it listed on some decentralized exchanges. So like it's like the supply of new token is unlimited, but there is only a certain amount of Bitcoin treasury companies. That's where the scarcity is. But we'll see. Interesting times, and Johan is saying that we are maybe going lower. We are right now at 105K, so you're saying we could like touch 100 even. So that's
Yeah, I think it's gonna like realistic in the next couple of months. Just really depends what happens in the tech stocks, I think, because tech
yeah,
stocks seems to be like setting the direction where we are going.
yes, interesting. But yeah, thanks for watching, everybody, and we'll discuss more with you on next time. And
Yeah, we do so. Thanks a lot.
okay, thanks all. Bye.
Bye.